All right, guys, thanks very much for joining us again this morning. Thanks, Shane, for the setup once more. We're going to be going and having a look mostly today at risk assessment, and that sits in section 15 and 16 of our audit file. We're going to go and have a look at 1505, the fraud RAC, and 1605, the business RAC. And these two documents are very much the culmination of what has happened before in our planning phase. We've gone through the planning phase and we've identified a number of risks, and now we need to go and actually do something with those risks. It's no good just saying, yes, there are risks. We need to take that a step further. However, before we do get to that, there are a couple more documents that I still need to go through in the planning section. If you recall, last week we finished with the general IT controls. So there are just a couple more that I need to run through this morning in section 12, which includes the risk identification sign-off, just to make sure that, as I've mentioned before, this is a comprehensive overview of RAC. So I'm going to go into 12.50. Now 12.50 is a business process overview. Now, this is a working paper that we're probably going to do a little bit more development work on. When we initially got the template from Protect Partner, there were a few things that we didn't quite fully follow on what they were trying to get us to do. But the bottom line is, as part of the planning process, we're required to actually go and document the system descriptions within a business. What this working paper is pretty much trying to do is just make sure that you pick up all the material items that are sitting in your balance sheet and income statement, because that's what we're saying. If you've got a material business process, then this must be documented. So with this template, 12.50, the only thing it's really doing is saying, well, here's the balance. Is it material or not? If it is, then the business process must be documented. The trouble is then you get into a situation where you look at something like cash and cash equivalents and it tells you no documentation is required. So that doesn't really kind of sit comfortably with me. I kind of feel we'd rather go and have a look at the cycles, and what we've actually done, there used to be a 12.55, which was where you actually went and documented your business processes. And what we've actually decided is that's not the most appropriate place for it. We've actually gone and moved 12.55 out of section 12, the business process system descriptions, and we've actually gone and put them inside the indexes of every single audit section that comes up. So we're not going to have a look at that today. All I'm really pointing out in 12.50 is that the document is there. It's supposed to be some guidance to decide which business processes we should or shouldn't be documenting. But go back and read ISA 315. It has a very interesting paragraph which deals specifically with implementation of the ISAs in small audits. And it's basically telling you that in a small audit, you're not going to need the same level of detail as you would with a large company, a listed company. So just go and read up on ISA 315. We're not expecting pages and pages of documentation about how revenue is recorded. It might be something quite simple. So because of that, and because of the nature of, I'm sure, most of your clients, rather just when you get to that index page, and we'll have a look at it probably next week, document your business process right there in the index, and the other great thing is that it will roll forward from there. So I'm not going to spend any more time then on 12.50. I want to move on to 12.60 and 65. 12.60 and 65 are not really compulsory working papers for you to be completing on every single audit. You'll see by their very name, 12.60 is common fraud risks and 12.65 is common business risks. The whole point of this document, and it's actually something that has been carried forward out of our old audit light, this is a listing of a whole lot of potential risk factors that you can consider. See, these are not things that you must go and put into your audit file. It's just for consideration purposes, just for you to go and think about if you are looking for additional guidance, and I think that's the key point. If you know the client and you're comfortable with where you've gotten so far in the audit and you're comfortable that you've raised the correct risks throughout the audit, then I wouldn't even open up this document. But it is a useful one to maybe go through, go and understand what sort of risks can there be out there. Maybe it's a bit of an exercise to do when you've got some free time. I know that always happens in an audit firm. You've got tons of free time. Go and read through these as a bit of a self-study to maybe make you more aware of this kind of thing that you should be or could be looking out for. So 12.60, it lists a number of fraud risk factors. Because we're dealing with specifically fraud risks, we're not needing to go and then first comment, is it a business or a fraud? We are assuming that it's fraud. Go and say yes. With a common fraud risk, we also give some possible management responses. How is management responding to these fraud risks that we're identifying? Maybe go put a working paper reference in. If you have gone and documented any additional information. But as I say, not a compulsory document, and if you like, you can probably just go and delete the document or just mark it as not applicable. It's just a guidance, it's just some additional information. So if I go as well and have a look at 12.65, very much the same. In this case, all we're doing is just listing them, and you say whether or not this risk is applicable. A lot of ideas, but again, it's not a compulsory document. Use it at your discretion and as you feel is appropriate to your audit. Section 12 going quickly now, but the next document I want to look at is 12.70. And I want to spend a little bit of time on this document, quite an important one in the context of the audit. Now, this is one of the very few places within RAC where we've actually gone and taken the ISAs and copied and pasted the information directly out of the ISA into the guidance of this working paper. And the reason we've done this is ISA 240 is a pretty important standard, and specifically what we're wanting to look at is these presumptions of a fraud risk that ISA 240 is telling us to make. So ISA 240 is telling us, make a presumption of a fraud risk related to revenue recognition. In fact, let me make this a little bit bigger so that you can see with me as I read. Make a presumption of a fraud risk related to revenue recognition. Now, I'm sure by this stage, everybody has become familiar with this requirement. We have got to raise a fraud risk over revenue. This is what the ISA is telling us. It is also telling us make a presumption of a fraud risk related to management's ability to override controls. And therefore, we must test appropriateness of journal entries, review accounting estimates for bias, and review significant transactions that are outside the normal course of business. Now, there is no option given to us here. We've got to do this. Now, how we've approached this in RAC, when we look at journal entries we covered. There's a separate audit program specifically for journal entries, and that's 20.20, and we'll have a look at that in future weeks. The significant transactions outside the normal course of business, there are already procedures in place, and those procedures fall onto every single audit program that you open. Once we've populated the audit programs, there are 2 procedures actually going and dealing with these significant transactions. So we've dealt with that paragraph as well already in RAC. What we still needed to do, and this is why we added 12.70 a little bit after we released RAC, is we needed to go and make sure that we are dealing with this fraud risk related to revenue appropriately, and we need to go and make sure that we are reviewing accounting estimates for bias appropriately. So it is those 2 paragraphs or those 2 sections that we're dealing with in 12.70. Okay, so that's why you will see that there is a little discussion here. What I've just mentioned to you, revenue, is on this working paper. journal entries on this working paper. Sorry, not journal entries, has got its own audit program, and you'll see it specifying there, and accounting estimates. But you'll see that all we have here is revenue and estimates. Okay, so let's go and have a look at the detail of those sheets, and we'll start with revenue. Now again, we've gone and documented what it says in the ISA, and this is from the application material as well, and it is telling us that it is possible to go and rebut this presumption. We can actually go and say, but in this case, for this entity, there is no fraud risk. However, we've got to document our reasoning. And we've said it a lot before in this training, the documentation is what becomes very important. Now, I certainly fell into this trap when I was in audit. We'd get a property company and we'd say, look, there's no fraud risk because it's so simple, but we didn't document our reasoning very well. So what we're trying to do here on this working paper is, we've got a question here. Based on the above, are there valid reasons within this entity to rebut the presumption of revenue as a fraud risk, yes or no? Now, if I go say yes, we can rebut this presumption. Then we need to go and give reasons for every single assertion. It's no good documenting just like, no, there is no fraud risk. We got to go and give a reason why. Now, in a property company, what I would say is that we've got very few invoices. It's very easy to go and trace whether or not those invoices are in fact for the valid amounts, that there's no attempted fraud related to the revenue. It's easy to test, whatever the case might be, document that. And at least go and say as above. If that's a reason that you feel is sufficient for all of these assertions, go and say as above, or I would almost go and document cutoff. Well, there are only 12 invoices, so it's easy to trace that cutoff is appropriately applied within the entity. And then I'm wanting you to go and confirm as the partner or whoever is reviewing this, whatever decision you make as to who can answer this question within the firm. Is this sufficient reason? I can't generate a formula to decide whether or not your reasoning is sufficient, but this is kind of like a double check. So you've given reasons. Are those reasons valid in considering revenue as a fraud risk as well as considering each assertion? Okay. If you go, yes, there is no fraud risk, yes, we've documented our reasoning. Sorry, now actually note that I cannot type in here. The reason is I'm not logged in yet. So let me go and log in as a partner. Okay. Give it a moment to catch up. And now I go and I say that I have deemed that my reasoning is sufficient. Okay, then you will not have revenue as a fraud risk when we get to our fraud risk register. However, if you don't believe that there is a reason to rebut the revenue fraud risk assumption, you would just go and say no, and you would move on to the estimates working paper. Now the estimates, once again, we have gone and documented the information out of the ISAs. And the ISAs are quite clear here in terms of what we're supposed to do with estimates. And once again, one of the issues that I certainly noted in my audit career was that we would get to something like impairment of property, plant, and equipment, and you'd go and do a test for impairment. But you wouldn't really know why. I mean, yes, you need to do an impairment test on PPE. Obviously, you need to go and consider valuation. But impairment is actually an estimate. And for me, there was just no link between the ISA 240 discussion on estimates and what we actually did in our audit. So was that estimate a fraud risk or not? If it was a fraud risk, we should have gone and done far more procedures on impairment than what we actually did. But if we decided that there was not a fraud risk, then we could have gone and done less. But nowhere did we document that decision in the process. And this is what this worksheet is all about. It's going and documenting based on the estimates that you identified in 10.20 If you recall what we did in 10.20, we went and identified what all the components were that are applicable, and we went and decided what estimates are applicable for each of those components. We now need to go and do 2 procedures on every single estimate in the financial statements. And this, at this point, I'm still in the planning phase. Maybe you don't have the information at your disposal in order to go and do these procedures. So it might be something that you need to go and do once you arrive at the client, or maybe you actually need to send a planning team out before the audit commences to go and hold these discussions. Procedure A is evaluate whether the judgments and decisions made by management in making the accounting estimates included in the financial statements, even if they are individually reasonable, indicate a possible bias on the part of entities management that may represent a risk of material misstatement due to fraud. If so, the auditor shall reevaluate the accounting estimates taken as a whole. Okay. Now, what is it telling us? Review judgments and decisions made by management related to all of these estimates separately and in aggregate. So let's go and have a look at impairment. You go and do the audit, and you go and ask them about property, plant and equipment, and you ask them, well, have you impaired property, plant and equipment? Their answer is no. Does that mean there has been no estimate? It doesn't. Management judgment is that there is no impairment necessary. That is their judgment. What if they are busy applying for a very big loan from the bank? Do you think they will want to go and impair their assets at this point? Or do you think they're going to rather skip it over and do the impairment next year when they've got the loan from the bank already? Okay. Impairment, or the lack of impairment, does not indicate no estimate is in place. So we need to go and have a look at the impairment of PPE, discussions with management. Then we need to go and look at the the IAS statement on property, plant and equipment, IAS 16. It goes and gives us a whole lot of impairment indicators. In fact, the impairment standard as well is at IAS 36, I think, is dealing with impairment. Go and read up on that. Go and look for those indicators of impairment and go and document that fact and indicate whether or not you believe that management is exercising judgment to misstate the assets. So is there bias in their reasoning behind what estimates they make? Depreciation. If they use all of the depreciation rates, for instance, of SARS, does this indicate management's bias? Or if they write everything off over 1 year, or if they write everything off over 50 years, is there management bias in place over depreciation, useful lives, residual values? We've added here stock obsolescence, trade and other receivables, the doubtful debt provision. These are just a few of the estimates that we raised in 10.20. Now, a couple of the issues that may be worth addressing is, for instance, you've got shareholder loans, interest-free shareholder loans. What does the standard say? We need to measure them at amortized cost, but we have no interest rate and we have no repayment period. Now, the interest rate isn't a problem because we need to put them at amortized cost at market rate. So we could say prime is the market rate, but there's no repayment period. So therefore, there's no way for us to go and calculate the amortized cost. And for that reason, we can then go and document that, well, because there is no interest rate, because there is no repayment period, then there is no bias by management to try and misstate the financials. We just have to carry it at its carrying value. There's nothing we can do to the value. So amortized cost is fine. What if you suddenly notice, hang on, but this loan is actually reducing by 10,000 Rand a month? And management is not informing us of this? We need to go back and consider, do we need to do an amortized cost recalculation? So procedure A is going and evaluating those judgments and decisions by management. Procedure B is a retrospective review of management's judgments and assumptions related to significant accounting estimates reflected in the financial statements of the prior year. Now we need to go and have a look at our prior year column in the financial statements. Go and have a look at what management judgments were in place last year. So let's say, for instance, we're now a year later, management did not impair their assets last year. They got this big loan and now suddenly they've impaired all their assets. This sounds to me like there is management bias in the way that they're doing estimates. What this ultimately means is if we're finding management bias, we have got to raise a fraud risk. Why? Because we have management who are intentionally misstating the financial statements. Even if it's minor, we need to consider this. We have a fraud risk. That means we need to go and do additional procedures over and above those procedures that we would normally do. So we need to raise the risk level. Now, if we go and document that depreciation is at SARS rates, and we document that there's been no change in rates, we get here and we say, based on the above, on these procedures, should this be considered a fraud risk? And you know what? No, we're not going to consider this a fraud risk. But we have documented in detail why we have decided that. So we override ISO 240 because we've done the two procedures that they have set out for us, and based on that we believe that there is no management bias, and therefore we can go on with our audit without a raised fraud risk on this item. Those items where we feel there could be management bias here still, we leave as a fraud risk and we let that flow through to our fraud risk register. Okay, so that is the process of 12.70. We're just trying to address these issues under ISO 240. Again, we don't want to try and find as many risks as possible, otherwise our work is going to be very difficult, but we need to go and find the right risks. And if some of these things are actually the right risk, we need to go and do something about it. We can't just ignore it and forget to document this pretty crucial information. If your documentation in the cell once again becomes too long, rather go and put a hyperlink in, put your additional working paper in the background rather than trying to complete it in this little cell. That's going to make it look a lot neater. All right, that is ISO 240 considerations, that is 12.70. 12.95 is now the last document within the planning section. Okay, and this is the risk identification sign-off. Now, the purpose of this document, like we saw in 10.25, the engagement setup sign-off, it's a little bit of a summary of the preceding documents in the section, and it allows the reviewer to go back and just confirm a couple of the results of these working papers. Now, in this section, all we've really done, because there's a lot of information we've documented, all I'm doing is going and having a look, has this document been signed off? And you'll see in all these cases it's no, I haven't been signing off the documentation as I've gone through. Once again, we are looking for some form of confirmation, and the confirmation can only be completed when you have signed in. Now, it's a simple process, just going and putting yeses in place. The very important thing about this document is 12.95 is kind of a decision point which will allow or disallow the ability to populate audit programs. As I said in the beginning, audit programs don't automatically appear within RAC. You actually need to populate them. But you need to actually go and have done a reasonable amount of the planning in terms of identifying the correct components before we know which audit programs to even go and put in to the financials, or sorry, within the audit file. Now, if you are in a position where you do need those audit programs urgently, even though you say here that the document has not been signed off, you can go and say yes in each of these blocks, and you will still be able to go and populate the audit programs. Once you've signed off this working paper, that's the other thing that it's going to look for. So you need to set it as reviewed or as partner reviewed. Otherwise, it's not going to populate either. And the reason for this is just that we're wanting to make sure that there is a reviewer or partner level interaction with this audit file before we just populate the audit programs. We don't want your first year clerks who don't really understand the audit process to go and populate the audit programs. They go and do the whole audit, and then you realize, but hang on, there's no revenue section in the file. So we've actually forgotten to go and audit revenue. Everything was looking great, but now we haven't audited revenue. So that's the whole purpose here. We want to make sure that the appropriate stuff is getting into the file, and we're wanting somebody at a higher level to make the decision about when we populate the audit programs. Now, if you do populate the audit programs now, and later down the line you realize, hang on, but I need an additional audit program, you can repopulate. It doesn't override the or doesn't replace the existing audit programs. All it will do is add the missing ones when you populate again. So it's not a huge train smash, but just do be aware that you need to have gone through this document. You have needed to sign off as partner or a reviewer. There is then a question about locking the prelim analytical. And what this basically will do is, you'll recall that we've done the prelim and analyticals in section 11, and you need to import a new trial balance, or you've got to go and do various audit journals, or whatever the case might be, but you don't want those figures to go and change. So we've decided what we're going to comment on. We will still do a final analytical review, but you don't want the numbers to now change on my prelim analytical. So like, for instance, all the ratios you did and everything, that could all change, which you don't want it to change even slightly. You just want it to remain fixed. You can go and say yes, you want to lock the prelim analytical. Once you've done that, you can delete the entire trial balance. You can do journals, do what you like. The numbers in that prelim analytical will not change. If you decide you do actually want to change it, just come back and make this a no again. Open up your prelim analytical, and it will still go and update all the values. Now, because this particular file was a new engagement, you'll see that it is pulling through that we decided that this client was a moderate risk when we did our predecessor audit review. We've gone and looked at the working paper files. Maybe we picked up some issues in trying to extract information from the predecessor auditor, or maybe the client even said, you know what, no, you can't speak to my previous auditor. We've raised the level of risk. This is just an indication for you because of this next question, and this next question is quite important. It's talking about guidance for the overall risk for the client. So we've gone through the risk identification process. We've done all the planning. How risky do we feel this client is? Now, it is a judgment call. And if I hit the drop down, you'll see it's low, low to moderate, moderate or significant. What this will ultimately represent in your audit file is the minimum level of assurance that you need to obtain for every single assertion of every single component that you've selected throughout the rest of the audit file. So if at this point you're telling me that this client is a significant risk, I would almost be saying to you, but then why are you even accepting this client as a client? Because you are going to go and do so much audit work on this file to go and get a significant level of assurance for every single assertion of every single component. Now, we have not forgotten the risks at this point. We are still going to do the risk assessment, and we'll look at those documents in a moment. So generally, low is possibly the most appropriate answer because you're not wanting to take higher risk clients. Now, in this case, we've already said moderate, so you'd need to go and explain why you're reducing that risk. So this is just an example. So let's maybe set it to moderate. But that becomes, like I say, the minimum level of assurance. And when we look at the audit plan next week, we'll have a look where that comes out. So I'm going to leave that one at moderate. And we have now also signed this off. You can see that I've signed it off. My initials and the date are in place. I'm just going to flick across and back into 12.95. This allows a refresh of our database so that I can go to RAC, and hopefully on first attempt I'm going to click on Populate Audit Programs. Let's see what happens. Yes. You'll see at the very bottom, I'm not sure how clearly it'll come through on your side, but you'll see at the bottom left there is a whole little dialogue going as it's populating the various audit programs into the file. If you see this at the bottom left, then you've done everything correctly. If you press the button and it just quickly flashes back to whatever working paper you're already on, then it probably hasn't populated correctly, and you'd need to go back and find out what's wrong. Why has the audit population not worked? Let's go and look at the guidance. The guidance sheet goes and explains to you exactly what you need to have in place in order to populate. So if you are getting stuck, go to 12.95. In our other methodologies, so for instance Audit Lite Plus, there's actually a document 30.01, where are my audit programs? And you can go and have a look there for guidance on how to go and populate. But for RAC, it's sitting in 12.95. And it goes through the process. If you're still struggling, hop onto remote support. We can go and have a look with you if there's maybe a corruption or any other problems that you're experiencing that is causing the population not to work. So we're done with 12.95. We have done the entire planning process, or as I say, the risk identification process. We now need to go and do something with these risks. What are we actually going to do about these risks in the audit? We've identified the risks. That's great. We've documented all sorts of information about the client, but it's not good enough. We've got to do something with the risks, and for that we'll go into our fraud and our business RAC. Let's open up my fraud RAC. Now what I would just want to show you is in the large. I'll flick over to the medium in a moment. If we have a look at our fraud risk register in my large client, you will recall that with a large client we're dealing with lots and lots of assertions. So have a look here at the assertion section. There are a lot of assertions that you can go and link every single risk to, and it'll be explained more fully when I look at the medium-sized client. So look, there are all the assertions for a large, but I'm going to rather go and look at the medium. It's a whole lot easier. Here are the assertions when I'm looking at my medium-sized client. So that's why I say medium is sometimes a far better way to go because we're not dealing with quite as many assertions. You only want all of the assertions listed, all 14, when you're dealing with a particularly high-risk client that you need to go and do additional work on, or really need to go and understand the distinction between the assertions from an account balance or class of transaction or disclosure point of view. Okay, so here we are in my fraud RAC 1505, and what the document automatically does is it pulls through all of the risks that I've recognized. Now I just went to 12.60 and selected a whole lot of them here so that we could have a look at them together and we could go through the assessment process. But this is the crux of what's happening here. We have our revenue recognition risk. In this file, we didn't have quite as many estimates, or I marked all the estimates as not a fraud risk. Otherwise, your estimates would also be listed under 12.70, the ISA 240 considerations. We've got one risk that we documented in here from 11.20, and then we have a number of risks that I raised just in 12.60 for discussion purposes. What we now need to go and do is, I'm going to skip the revenue recognition. That pre-populates quite a bit of itself for you. We'll just have a look at the other questions in the other risks that we've identified. And the first question that we have here is, can the risk be related to specific components or assertions? So we've gone and we've documented this risk. Let's say, for instance, it's something like going concern. We're unsure that the entity will be a going concern. Can this be linked to specific components or assertions? And the answer, sometimes yes, sometimes no. Sometimes, because of a going concern issue, management will try and overstate revenue, for instance, so that it looks like they're still okay. They will try and understate liabilities, or they'll try and overstate your PPE. If you don't have a scaly director at the company that you're auditing, then maybe a going concern risk is actually just a pervasive audit risk. And we'd say that no, we cannot relate it to specific components and assertions. Now, if I say no to this first one, you will see that action 2, which is identifying the class of transactions, account balances and disclosures, and the assertions, is actually highlighted in black. We don't need to do that because we've just said it cannot be linked. But if we go to the next item and we say, yes, this can be linked to specific components and assertions, what do I need to do? Well, here's my risk. Which components does it actually impact? Let's go and tick a few. You simply go and type a yes. Okay, and as I type a yes, you'll see that the assertions are highlighting in yellow as well. We now also need to go and identify which assertions are impacted by this risk. Now let's go and pick one specifically here, cutoff. I'm going to say yes to cutoff, and you will see that the other cells are remaining yellow. Let me go and delete cutoff. Let me go and select completeness. When I say completeness, the other cells go green. Now the reason that this is happening is that RAC and Draftworx knows that what type of assertion these are. Completeness is an account balance and a class of transaction assertion. So if I select completeness, I have selected an appropriate assertion for both property, plant and equipment and revenue. I can go and select more, so it doesn't mean that I can't select more assertions. It's just telling me that I have not missed something. Whereas if I go and select cutoff, cutoff is only a class of transaction assertion. So I have not yet selected an appropriate account balance assertion. So I need to go and select another one. Let's go and select rights and obligations. I've selected rights and obligations. Everything is fine. Okay, now let me go and delete property, plant and equipment. You'll see that now rights and obligations becomes red. The reason is that I've selected an account balance. Rights and obligations only relates to account balances, but I don't have an account balance component. So we have an error creeping up, and that's why the red is popping up. So look out for the colors in these cells. We do try and guide you as much as possible to make sure that you are making appropriate responses when you are dealing with your risk assessment process here in our fraud and business RAC. So I'm going to select a few, move on to the next questions on these first two lines. Now, the next one is, because we've said we cannot link this risk to specific components and assertions, I need to go and decide what response will I then give. Where I have, for instance, let's go back to our going concern risk, and we've said that it is linked to revenue, so we believe that management will try and overstate revenue because of their going concern risk. What do? I go and I perform a specific procedure in my revenue section to address the existence of revenue. Because they're going to try and overstate, I test existence, and we go and make sure that all revenue that's recorded has existed, and we'll probably do it with a significant level of assurance. So in other words, we'll select a very large sample size. Where we've said, you know what, there's a going concern risk, but no, we can't link it to specific components and assertions. What can I do? What test can I actually go and perform? And here the ISAs actually give us some guidance, and it gives you a list of possible things to look out for. Do I emphasize to the audit team the need to maintain professional skepticism? Do I assign more experienced staff or those with special skills or use experts? Do I provide more supervision? Do I incorporate additional elements of unpredictability in the selection of further audit procedures to be performed? Do I make general changes to the nature, time, or extent of the audit procedures? Or do I do none of the above? Now hopefully you don't go and select none, but these are the responses. So it's literally go and select from a drop down. Let's go and say we're going to provide more supervision. Then I need to go and describe how I'm actually going to implement it. So how do I provide more supervision? Partner will visit daily. Managers will actually spend the entire day at the client, whatever the case might be. So this is a practical implementation of what we're doing here. Okay, so we make a selection and we give a practical outworking. This is how we're actually going to go and do it. We don't need to do this response where we have assigned specific components and assertions because we're going to go and do more procedures. So there's not a problem there. And then we need to go and document management's response to this risk. Now at this point, maybe once again, you're not with management, so you can't actually go and have this discussion with them. But we need to go and consider management's response in assessing these risks. If we find risks and management are dismissive of us or they don't agree with us, we need to document that fact because that can affect our approach and how we're going to go about doing something about that risk. So once again, we go and document what management's response is. Okay. Now, for the first item where we said we can't link to specific components and assertions, we're actually done. The risk is blanked out. We just need to go and provide more supervision as we said we would. However, for the items that do have an impact on specific components and assertions, the next question is asking us to go and document an existing control that addresses the risk. Now there are a number of ways to go about this. If you have documented your system descriptions very well, maybe you just want to hyperlink to that system description, or you can go and document this in detail. You can choose, but you do need to go and document something in there. You also need to go and verify the implementation of that control with a walkthrough, and a walkthrough is literally taking one item through the system that you have just described and going and documenting details. But please put in details. What's the date? Who did you speak to? What was the transaction number? Put in as much detail as you can about that walkthrough, and you can go and document the process that you followed. All right. Then we go and have a look at a question about whether or not we actually believe at this point, do we still have a fraud risk? So we've documented a risk. We've gone and said, okay, this is going to impact revenue and PPE. Okay, it's a very unusual risk that's going to impact revenue and PPE, but nonetheless, this is going to impact revenue and PPE. But then we went and we found, you know what, there's actually a control here. And we did a walkthrough and we thought, you know what, this control is actually very good. As a result of this, do we still believe that there is a fraud risk? Yes or no? That's what this question is all about. Yes, there is still a fraud risk, or no, there is not a fraud risk anymore. Okay? I'm not going to complete all the others, but just so that you can see what the difference is for the rest of the questions. If I say no, there is no longer a fraud risk, you can actually stop there. You don't need to do anything further. These two cells we need to adjust to highlight in black as well. If we say there is still a fraud risk, the next question is actually go and document the procedure that you're going to perform. So we now go and document an audit procedure in detail. Okay? We also have the opportunity to document an alternative procedure. Now, you would need to go and document an alternative procedure where you feel that, yes, there is a control, but there is still a fraud risk, but I want to test controls and substantive procedures. Then go and document an alternative. The other situation where you would need an alternative procedure is where, for instance, your assertions are completeness and existence. You can't test completeness and existence with the same sample. It's just not going to happen. Okay, so you can go and document an alternative procedure to address the other assertion. Okay, the last question is go and document which cycle in the audit program you will actually go and test these procedures. So where is it going to lie? Now the reason for this question is, for instance, here we have revenue and PPE. Those are different cycles. I don't want to go and do the test twice. I want to do the test only once. So I'm going to go and say I want to do this procedure under the trade and other receivables. What this will do is it still populates the procedure on both audit programs, but on PPE, and we'll have a look at it in a couple of weeks' time, on the PPE, it says, here's the procedure. It is performed under trade and other receivables, and you just hyperlink it to trade and other receivables. Just so that if ERBA picks up that you have a fraud risk over property, plant, and equipment, opens up your property, plant, and equipment audit program and says to you, but there is no fraud procedure, you don't have to first go and scratch in your head and find out where that procedure is. It's telling you on the audit program, this is still the procedure, but it's giving guidance to your clerk that although this procedure is here, it's actually performed in another cycle, so you just need to get that hyperlink in place. You don't need to actually go and physically perform the procedure. The other thing that we have done to this document is that the information that you have documented in here will roll forward. I know it's not highlighted in blue, and we need to consider changing that, but all the information about the control, about the procedures, about the walkthroughs, everything will roll forward to the next financial year. So it is worth documenting this information in detail. Whether it's a hyperlink or whatever the case might be, please do go and document this information. The other thing that we have put in place as well is a control to go and prevent trigger-happy clerks from deleting things they shouldn't. So let's go and say that they decide that the poor control of tangible assets is actually not a risk. And they go to 12.60 and they go and look for this risk. Let's go and find it quickly. Poor control of tangible assets, and they decide, you know what, I'm just going to delete it because I'm actually too lazy to go and do the procedure. They go to this working paper, they delete the poor control of tangible assets, and they flick back to their fraud RAC, expecting to have accomplished their tasks. And initially you will see that that risk has actually disappeared. However, if I scroll further down, there's a section here called prior year and deleted risks, and you know what? There it is. The risk is still in place. There is still a poor control of tangible assets. Anything that you had documented, obviously we hadn't in this case, would still be found within each cell. And this is how we're also rolling information forward. So if you roll forward and you open up your fraud risk and you've forgotten to actually implement that risk elsewhere in your audit file, it would actually just come and lie here under prior year and deleted risks. So that you can either go and say, well, you know what, this is still a risk, leave it right where it is, that's fine, it still carries through to your audit programs, or I can go back to the source document and include it in my planning somewhere just to neaten up my planning section a little bit. Either way, this is still part of the audit file unless you go and you need to have, once again, logged in as a manager or partner to go and say, yes, I want to delete this risk. And in fact, I don't think I'm logged in yet, so I can't type that in at the moment. So I'm not going to worry about it. I'm going to leave it right where it is. You would need to be logged in, say yes, delete the risk, move out of the working paper, and when you come back in, it will be gone. Okay, so that is the process around trying to protect your file from, like I say, trigger-happy clocks. 16.05 is our business risk register, or our business RAC, and the business RAC, very, very similar to our fraud RAC. I just want to quickly identify what the difference is that you will encounter. Firstly, you still need to identify whether or not it relates to specific, components or assertions. It then has an additional question here asking you, is this maybe a compulsory significant risk in terms of ISO 315 or ISO 240? It is just a memory jogger. Very often you're probably going to say no, because ISO 240 we've actually dealt with very well already, unless you suddenly pick up a risk that's actually related to maybe impairment or something like that, and you can say, well, this is an estimate, therefore I do feel I need to raise this as a significant risk. And then you would say yes, that just limits your options as we go. I'm going to say no in all three of these cases. Then it asks me, what is the likelihood that this risk will result in a misstatement? And we have 1, 2, 3, 4, low, medium, high, or almost certain. The example I use is, let's say we are auditing a retail store. And our risk is that there is stock theft. So what is the risk in a retail outlet that stock is going to be lost? And the answer there, I believe, is almost certain. Oops, sorry, shouldn't use the shift. It's almost certain that, well, in fact, certain that you're going to have stock theft in a retail store. Then we would say 4. Let's go for another item, and we say the likelihood that there's going to be a misstatement as a result. And it's not asking how big the misstatement is, it's just asking, is there a misstatement? Okay. Let's go and put a 2 there. Now, once again, for the item that cannot be related to specific components and assertions, we can't do anything about it. Okay. But for the other 2 items, we can go and document revenue, property, plant, equipment, inventory, cost of sales, whatever the case is. Go and document the components. When we get to the assertions, the colors work in exactly the same way. However, we don't answer with a yes or no here. We now go and put in a 1, 2, 3, 4. Sorry, it's very small, so I'll read it to you. A 1 is low, a 2 is low to moderate, 3 is a moderate, 4 is significant, and this is asking the potential magnitude of the error that will occur as a result of the misstatement that's caused by this risk. So let's go and say 4, we would say, is material or more. 3, I would say 75% of materiality. A 2 is 50% of materiality. A 1 is 25% of materiality. Okay. Now, let's go and look again at our stock theft example. What's the likelihood that there will be a misstatement as a result of stock theft? It's almost certain. What is the value going to be? And here you need to go and consider, surely they've already done a stock take. And they've actually identified a lot of their stock shrinkage. So is it going to cause a misstatement in the financial statements? The potential magnitude is probably low. So I would go say valuation accuracy, probably low. But again, each client is going to be different. Maybe you want to say, well, there's going to be a material error as a result of stock shrinkage because they don't do their stock take correctly. So we're looking for a 1, 2, 3, 4, which is an estimate of what magnitude impact this will have on the financial statements. Okay. It is a judgment call. You need to exercise judgment in this case. You need to make use of professional judgment here. There's not really a right or wrong answer on the one hand, but it must be justifiable, what you document here. All right, once again, action 3 is only for the item that's not related to specific components and assertions. There you have an overall response. Then and the same, you need to give management's response. Now, with the fraud risks, we said that you must document a procedure. With the business risks, we're giving you the option to document a procedure. And as soon as I say, yes, I want to perform a specific procedure, what this will do is it actually then doesn't carry this risk through to your audit plan at all. You go and document your procedure, and once again, you go and document where you want to perform that, which cycle, and it'll go and put it on the audit program for you. This item, it's going to carry through to my audit plan, and I will decide on specific procedures. Now, what I want to point out with RAC Micro, if you have business risks that carry through into your business RAC, one of the requirements of RAC Micro is that you do go and document the procedure on your business RAC. This is the procedure that I'm going to do so that actually our audit plan only is left with low risks. We don't need to do the audit plan in detail because everything is going to be substantive test of detail, and I will address that in a little bit more detail next week when we have a look at it. So for RAC Micro, you've got to go and document your procedures here, and this will then pull through to the audit programs. The deleted risks work in exactly the same way on your business RAC. Anything that is deleted is carried down to the bottom. Now, just as a little bit of a sneak peek at what is coming next year, we've had a lot of comments from you guys, from our users, that is saying that the layout of this working paper is a little difficult. And up to now, we haven't had the technology to really do anything about it. Now, this is still a development document, so please forgive me if there are some errors. But this is what we are doing with this business and fraud RAC going forward. We have gone and redesigned it to make it portrait rather than a landscape document. And you'll see that the risks are pulling through. In fact, we have documented information and it's already appearing from our previous version. So the two versions of this file are completely interchangeable. So there are the components that we selected. Here are the assertions that we selected. We've gone and documented information, documented the walkthrough. All of this information is already in place. Okay. The whole idea is that, for instance, let me just show you, if I want to go and add an additional component, so let's go and use this drop down. I want to go and add depreciation. As soon as I add depreciation, it adds another row for me so that I can go and document the next one. And as soon as I document an additional assertion, it goes and adds another row so that I can, as I go, just add with a drop-down list rather than having the vertical layout of all the assertions and components listed. We're now working on a horizontal plan because we can now automatically open and close rows as we go. So let's just go and have a look at 12.60, for instance. Here we need to go and document management's response. Can the risk be related to specific components and assertions? If I say no, it doesn't give me the option to select components and assertions. It's just asking me for my overall response and my description. If I say yes, we can assign specific components and assertions, then it immediately goes and closes those and opens the first component and first assertion for me to go and document, and so on and so forth. So that's the layout of the file that we will be working with. What we do unfortunately lose is the hyperlink. It becomes a little bit impossible. Unfortunately, spreadsheets don't allow a decent formula for what I need to put into that spot, so it just gives a reference. It's not a hyperlink anymore, but it does still carry forward the deleted items as well. So remember that prior poor control of tangible assets we deleted earlier, it still sits here. It hasn't been taken away, and it would still require management interaction to delete. So we've actually just gone and changed the layout of the file completely. Okay. All right, so that is our risk assessment process. Next week we'll go and have a look at the audit plan. So Shane, I'm just about done. There's just one thing that I want to make mention of if you want to start getting your polls and stuff ready in the background. I don't know how many of you follow the IASB. They not yesterday, maybe the day before yesterday already, actually released a practice statement on materiality with regards to financial statements and the preparation of financial statements. I attended an IFRS course in May, and I just thought I wanted to mention this concept of materiality to you. Now, as auditors, obviously we've got a slightly different materiality than what the preparers of financial statements have. It can be a slightly different number, but I want to point out something that this document also mentions, and something that was mentioned quite extensively when I did the IFRS course, is disclosures in your financial statements, and this applies to financial IFRS SME as well. I want to read this to you, and this comes from IAS 1, paragraph 31. Some IFRSs specify information that is required to be included in the financial statements, which include the notes. An entity need not provide a specific disclosure required by an IFRS if the information relating from that disclosure is not material. This is the case even if the IFRS contains a list of specific requirements or describes them as minimum requirements. An entity shall also consider whether to provide additional disclosures when compliance with the specific requirements in IFRS is insufficient to enable users of financial statements to understand the impact of particular transactions, other events and conditions on the entity's financial position and financial performance. Now, this is something that I think is a little bit forgotten at times when we're preparing financial statements. We have, and I mentioned it, we spoke about it last week, that 16 Rand interest income we go and we put on the face of the income statement. Is that material? No, it's not. The IFRS gives us the right by this paragraph, if we don't believe that that 16 Rand is material, in other words, from a financial statement point of view, materiality will influence the decision of management, we can actually skip the disclosure completely if it is not material. So we can just move interest income into other income and neaten up our income statement because it is not material. The other example that was given when we were doing the IFRS course is something like intangible assets. How many of you are actually going and putting your software under intangible assets? And many times I've seen this. People are putting their computer software as intangible assets separately or forgetting to do so, vice versa. But if your intangible asset is 2,000 rands and your PPE is 1 million rands, then just put your computer software under computer equipment, because it is not material. Therefore, you don't need to go and separately disclose your intangible assets. That 2,000 Rand of intangible assets is not going to affect the users of financial statements and the decisions that they're going to make. So go and have a look out for this ED. It's an interesting read, the concept of materiality, and I've actually gone into discussion with a few people about what impact this could have on us as auditors as well, if we go and fully understand what this ED says. Now, the exposure draft, sadly, maybe not sadly, maybe a good thing, does not state what percentage to use. It just specifies that for every line item of the financials, there could be a different materiality requirement. It doesn't in the end give you an answer in terms of a percentage, but it gives a very good understanding of the concept of materiality and what you're wanting to achieve with materiality. Also, just coming back to briefly to the discussion we had last week about who may perform a review, and I've spoken to a few people. It seems that the norm is that the various bodies have some form of a certificate process. So there is a certificate requirement. There's an additional course or exam or various things that you actually need to go and do before you're allowed to do a review. So if you're unsure whether or not you can do a review, please contact your registration body, be that cyber, SIAT, whoever it is. Go and contact them directly, please, and just ask them what their process is in terms of getting you certificated to actually go and do a review. All right. Thanks very much. Shane, I know it's short notice. Maybe I see the 1 or 2 questions coming in asking for the ED. Maybe if you want to add it as one of the poll, would you like the exposure draft? And we can pick up the names from there and send a copy through as well.
So Leon, it's actually time. So I've just put up the closing slide, and I will run a few polls as suggested. I'm going to do that now. But if you guys, I'm very conscious of time, and it's still ringing in my ears, Leon, your comment earlier about the guys having a lot of time in audit firms, a lot of free time to do reading and that. And I just thought I could just imagine there were a couple of us sort of sitting up and thinking, what? Did I hear correctly? But we'll do a poll next week and just find out how many hours a day you guys have got free. And but yeah, but Leon, thanks. I think that you can stop the recording now. And honestly, let's just I don't think we're going to have time for any questions. I will run a poll right now, if I may. Just the sort of the main one that I want to always run at the end of each poll is: can you please just give us your feedback? Was this session a tops for you? And I will just, where is the one here? There we go. If I can just run this one first of all, please, before you guys run. And then I've got 1 or 2 others. They're not hell of a essential. They're certainly not auditing specific. And I've also got, I've got a lot of positive feedback from that WhatsApp thingy that I shared with you guys last week. Leon, it was that when I sent the location. And so I've got another little WhatsApp thingy to share with anybody who's interested at the end. And that's the voice messaging that you can do with WhatsApp. Do you want to just talk about the, if there are any other questions that you've seen in the panel there, Leon? I'm not going to have time to publish any of those, obviously, but is there anything that you want to just chat about?
Yeah, actually there's a question from Yaku about the original business RAC being available after the new version is released. He says he's preferring the current version. Yaku, at the moment, as you could see in what I did, is those two are completely interchangeable. So if you don't like the new one, you should be able to just drop the old one back into the file. But if I forget about this discussion later down the line, please do let me know. We can make it available manually. We just wouldn't want to put both in the template because it does use up quite a bit of space. So please let me know down the line if you would like to be able to flick between the two.
Okay, great. Sorry, thanks,
Yeah.
Leon. Yeah, carry on.
You want to maybe put up another poll there?
I'm going to run another poll, but you're welcome to keep chatting in the background.
Okay.
This one, guys, is just you can actually vote for. I'm hoping you're going to go for YouTube. That's really, Leon, is that not the easiest for us to go the YouTube option?
Yeah, look, it's easier. It's one place for us to hold it, but you know, if people do need those additional downloads, then make a plan.
Okay. Well, listen, we're giving you the chance. I've actually rigged it. I've rigged it so that you can actually vote for both. But I would prefer it if you could actually just choose one or the other, please, folks. And Leon, are you seeing those responses coming in? It's quite interesting. Yeah. Actually, I don't know what I was expecting, but it's not what I was expecting. If you know what I mean.
Yeah.
Okay, that's very interesting. Thanks. I think, Leon, you and I can maybe just work on that. There's definitely a majority going for YouTube, but what I'm seeing there is actually more folks asking for Dropbox than I expected. I really didn't think there would be a lot. Anyway, Leon, yeah, you and I can maybe just chat about that. There's one other thing that I just want to share with you guys before two other things. Leon mentioned certificates earlier, and I just need to remind you guys, we are keeping a very careful record of certificates, and it's based mostly on email addresses. So please stick to one email address for the series. It causes a huge nightmare. In fact, if you try and show us that you've actually got 5 email addresses, you're going to probably end up getting 5 different certificates, one for 1 hour, one for 2. You're going to clock up, if you attend all of the sessions, we've got a number of folks who haven't missed one, you're going to get a certificate for 8 hours for the whole course, okay, and it's a very fancy certificate. It's awesome. And I just wanted to also talk about, you can see the screenshot that I've put up is just to give you an idea of how the schedule actually looks. That was for an IFRS course that we ran in August and September, and we actually just started the advanced version of this course yesterday. And in that course yesterday, I told guys about the Draftworx RAC webinar today, and I'm doing the same for you guys, just telling you about the advanced IFRS. If you are keen, it's actually presented by one of our 2020 members who's also a Draftworx user, and he's passionate about Draftworx, and he's always also a very good sort of, if ever he comes across anything in IFRS that's not covered in Draftworx, he picks it up for us and lets us know. He's a chartered accountant by the name of Wayne Twigg, and he's doing a really great job, and that's what's covered. So session 1 yesterday was actually on income taxes. Next week it's on foreign currency translation. Each one of those sessions is an hour and a half. It's only $900 for the whole course, and it's a follow-on to that, to the 8th part. And I know some of you guys who are on board actually attended that. What I'm going to do is just run a poll for you guys as well. If you're wanting to tune in to that, we'll give you the chance to vote for that. So just one last poll, and you can score a yes, please. We'll just register you for that, and you can join us. That's on Thursday afternoons from 3 until 4:30. So there's 5 sessions, 1.5 hours each, 7.5 hours altogether. And yeah, I think that the other one was just, Leon, do I need to run a poll on who would be keen on that exposure document? Must I do that, or should we just send the link out with the recording? What do you think? Sorry, Leon, are you still there? I'm not actually.
Sorry, I forgot my mute.
Okay.
No, I think
oh, you're talking to yourself, are you?
Yeah. I think we can just send out a link to everybody.
Yeah, I think just if you can send me the link, I'll include it with the recording when it's ready. We'll send it out later today.
Yeah.
Awesome. Yeah. Okay, Leon, I think that, yeah, thanks very much again for all your preparation. I know that there's lots of hours that goes into getting it, and it's always pretty slick, and thank you for that. I must say the sound quality was absolutely unreal this morning. It was fantastic. I was just monitoring it the whole way through. It's going to be an awesome recording. So thank you for your efforts, man.
No, great. Thank you very much.
Look forward to next week. Great.
Yeah, no, looking forward to that as well.
I don't know if you're finding it as well, but a week goes by really quickly these days.
It does.
Yeah. Yes, it's incredible. All right, so thanks, guys. I think for anybody who's interested, this is the little WhatsApp freebie. We're not charging you any extra for this, but we're not actually charging you anything at all anyway. So, yeah, that's a bit of a silly comment, but you know what I mean. This is all thrown in extra, no, all part of the deal. The other little thing about WhatsApp, which you may or may not know, that last week, those of you who attended last week would remember we showed you how to send a location, and our guys were saying, yes, I didn't know how to do it, and it's so simple. Well, here's another thing. if I want to send a message to Leon and I know that Leon is in a meeting or he's doing a presentation or something, I don't want to bug him, what I can do, and I'm driving, that's the other thing as well. You guys shouldn't be sending messages when you're driving. Please, it's flipping dangerous. And I see guys doing it all the time. Leon, I'm sure you have as well. Won't you just rather use WhatsApp, and all you've got to do is you've got to have the guy obviously call it up on the phone, and maybe you should just stop for that. Call up the guy on the phone, but all you need to do is just hit that record button. That's a record button over there. And so literally, you could be driving, you just hold that button. How's it, Leon? I just want to let you know, send you a message, and then you release it, it automatically goes off, and he will pick that up at the end of his meeting, your client or your colleague or whatever the case may be. It's just a little thing that I thought I'd share with you. So there we go. I think that that's the story, just our contact details. Thanks, guys. Look forward to working with you again next week. Cheerio.